Well, Securities and Exchange Commission Chairman Gary Gensler making waves again in the crypto space to bolster protections for customer assets. Gensler proposing changes to federal regulations to expand custody rules to include assets like crypto in efforts to protect consumers' assets should the advisor or custodian go bankrupt. Here are the details on this is Yahoo Finance's David Hollerith. David, more changes here coming from the SEC.
That's right. A bit of a change up after so many enforcement actions over the past couple of weeks. But this proposal in particular, it's got some nuance to it. But essentially, it extends a safeguarding rule to other assets. And in particular, the SEC in this proposal has mentioned crypto assets. And it applies to investment advisors, which include hedge funds, wealth managers, and other registered investment advisors that custody client funds. And it's asking them to hold those funds with a qualified custodian. It also requires for the first time that advisors and qualified custodians enter into a written agreement, which effectively helps guarantee that custodians are protecting client assets. So above all else, this is intended to prevent fraud. And, without a doubt, especially in crypto over the last year, thinking about FTX and a number of other bankruptcies, this makes a lot of sense. However, the big issue is that crypto custody can vary widely across the industry. And what a qualified crypto custodian isn't abundantly clear. Now, during the meeting, which is still going on, it's been noted that this would mean more compliance costs if the proposal became a new rule. And there would also be costs to custodians in meeting some of the obligations, obviously, if they to become a qualified custodian. Now, just going further, calling the rule part of a broader strategy of wishing complete jurisdiction over crypto into an existence, Commissioner Peirce highlighted that the proposal is saying that while she highlighted that while she thought the intent of the proposal was good, it could result in more costs on investors that ultimately would outweigh the benefits of the rule. Now, the issue also being addressed not addressed, but in this proposal that is being brought forth is that it's unclear whether or not regulated crypto firms that custody assets such as institutional programs run by major exchanges could meet these requirements. So the proposal, which comes after this series of enforcement actions, no doubt places more burden for regulation on crypto firms. And obviously, that's something that is wanted for investors.